Hello guys, welcome back in today's crypto technical analysis. Today we're going to dive into a multiple time frame analysis for BTC. However, before we start, I've got a small request from you. If you guys are learning and enjoying from the content, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. Seems like yesterday we have a bullish engulfing candle right after these consolidation below $21,000. Market started exciting again, and they're expecting that we're going to go to 30,000, breaking 30 and $33,000 will give us a bull run. However, it is very early, I would say, with a high confidence to go back to the bullish scenario, even though we're going to break $33,000. However, it's very early, as I said, to talk about those levels, and we'll do a multiple time frame analysis. Based on the lower time frames, we will find out the local resistance and higher time frame resistance levels. And at the same time, as you can see, similar scenario, 7th of March weekly candle, as well as 28th of February, how we got rejection right from $45,000. The bears were strong, and then we printed bullish engulfing candle. That candle covered both of these candles, and then we started pumping all the way up to 48,000, where we had a strong resistance, right? And we started shorting right from $48,000. So based on a higher time frame, based on a mid time frame, for the conservative traders, as you know, beginning of the April, which was the level was $45,545. However, the market started counting even these candles, which is a nonsense, color of the candles, first candle, second candle, etc. Once we started printing ninth candle, if I'm not mistaken, in the BTC's history, we never printed more than 9 candles or 8 candles. Well, it's just irrelevant. And then they were expecting that we're going to have a reversal. However, it didn't work. And as you see, once we broke $33,000, $32,000, we had another nice dump in the market. So therefore, you need to know your time frames as well as the support resistance based on those time frames. As I said, based on a weekly time frame, the levels are slightly changed. $33,000 became first resistance level based on a weekly time frame. Then it's going to follow $35,000. And then we've got other levels, which is early for us to talk about it. So based on a weekly time frame, one has to keep an eye on $33,000 and $35,000. A daily time frame, based on a daily time frame, we do not have much change. As soon as we're lost on the 26th of November, once we broke the major support based on a daily time frame, retested perfectly to the dollar, and then we started. That was the first pump, consolidated a bit. And then we followed the second dump in the market all the way up to $17,500. So since then, based on a higher time frame, if you're a higher time trader, massive dump on the market, which was 70% dump in the market. With the current price action, it is nearly 65%, and still we do not have an exit signal. So if we're going to pay attention to the current daily resistance levels, it's going to be $25,000. As I said, without breaking $25,000, it's going to be early for us to talk about the daily time frame consolidation. If we're going to break the $25,000, then we might have a chance the daily time frame will enter back into consolidation level. Since 18th of March, that was a daily time frame consolidation. However, we had resistance levels above us, 48 as well as $52,000 in order to get a bullish setup. It didn't happen, and we saw a decent dump in the market. However, once we saw a daily rejection right from here, you can see one after another candles getting rejected. We've got high time frame support, which is going to be 21,400, 21,300 levels are extremely important on the higher time frame. As long as we're going to get a confirmation, then highly likely this time we will break $25,000, and we'll have a high chance that the daily time frame will enter back into consolidation. Moving on to 4-hour time frame. Before we do a further analysis, if you want to learn all these technical analysis, what I'm showing, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and 101 Intense Masterclass is available, where I'm going to teach you how to become a profitable and professional trader in the market. And it only takes you 5 to 10 hours to master this all. And during the course, you will learn day trading, i.e. scalping, swing, and as well as the long-term as an investor trading systems. Based on a 4-hour time frame, $20,000, ideally $21,500 were long setup that was provided and confirmed. Both systems that I'm following perfectly retested, as you remember, and then since then we started pumping. However, as I mentioned that number of times over the Twitter, $24,500 as well as $25,000 are high time frame resistance, and as a result that you see we started dumping based on a lower time frames. So there is no reason to exit from, if you entered right from 21,000 all the way up to $21,500. We saw a decent pump, which is over 13% pump in the market. With the current price action anyway, we are up by 3%, and there is no reason to change your stop loss at this stage. As I said, 21,500, ideally 21,300 levels are extremely important support levels. So nearly we're at a support. As long as we do not lose 21,300 with a confirmation, closing below and then confirmation, then it is going to be early for us to talk about the bearish scenario based on a 4-hour time frame. Moving on to 2-hour time frame. Based on a 2-hour time frame, as soon as we broke $20,500, $20,000 claimed as a support with the previous resistance, then we started pumping all the way up to 24,300 level. However, 2-hour time frame, by losing $22,980, as you can see, again retested it perfectly to the dollar, and then we entered into a consolidation. So 2-hour time frame consolidating around these levels. However, based on a time factor, as long as we're going to be above, in the 12 to 48 hours, if we're going to be above $21,700 and $800 and consolidated around here and break, the resistance is going to be $22,800, then we can go back to the bullish zone. However, if we're going to lose around $22,500 in the 12 to 48 hours maximum, then 2-hour time frame will enter under the bear's control. The system that we're following, as you see, once we broke 20,500, perfectly retested it to the dollar, the smart money line, and then since then we started pumping. And at the moment, as I said, without losing this smart money line, it's going to be early for us to talk about the bearish scenario and to plan your exit setup based on this system. And at the same time, you can see higher highs and higher lows on the smart money, which I follow as a market structure. As long as we're going to be above $20,300, maybe we're going to have a week down there and then come back, consolidated a bit, claiming the upper line of this resistance level, which is going to be $22,500, $600, then we will have continuation towards the upside. And I'm not going to cover 1-hour time frame on this episode. It is under the bear's control. Play level to level, and we came to an end of this episode. If you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I'll see you in the next one.